So we're going to talk about buyers and sellers area. And if you trade on this area, you can have some good winning ratio. How to trade on buyers and sellers area, the entries and levels. So this is what we are going to do today. Trading on buyers and sellers area and the entry level and the SNR level. Okay, the first thing we first do is okay. So now when we talk about buyers area and sellers area, if you see a momentum like this, or let's say if you see this kind of market like this, like this, like this, let's say this is a ranging market, that is the swing high and the swing low of the market. This is the swing high and this is the swing low of the market. So this is a ranging market. Okay, guys, before I continue, can you still hear my voice? So it will not be, maybe I'm just speaking. Okay, no problem. So this is a ranging market. That is the swing high, swing high, swing high, and the swing low, the swing low. So in this type of situation, if you want to be trading on buyers and sellers area, like I told you that there's nothing like buyers and sellers area on the chart. It is only levels. Okay, some minutes, guys. Okay, there's nothing like buyers and sellers area. So it is for you to know where the buyers and sellers area are waiting to buy or sell the market. So what you see on the chart is levels. That is the support, the resistance level, and the support level. So at this time, the buyers and sellers may be waiting at any of these levels just to buy or sell the market. If this is a resistance level, that means the sellers are waiting here to sell the market. Or if it's a support level, the buyers are waiting here to buy the market. Same thing in the case of a change of polarity. Let's say this is a resistance, then on the right side it becomes a support. So that means at this level, that means the buyers are there to buy the market once the sellers reach that level. Same thing when support change to resistance. So if buyers should come to that level, that means the sellers are waiting at that level to sell the market. Say for example, let's see the chart. Here, let me go back. Okay, now look at this. This is a downtrend. This is a downtrend. And you can see here that we have something like, it looks like ranging market, but if you check it well, it's not that normal ranging market. I will explain to you, but let me show you. Let me just give you an example of this. Okay, I think here this is the ranging market. So from this area, the market is ranging. And then what happened? The market break it. So this time, the market break this ranging area, and this is a fake breakout. You can see after the breakout, the seller entered again. So the seller didn't respect this level because of this fake breakout. No, now you can see that at this time, this is a ranging market. How do you know that this is a ranging market? Because if you look at it, that the market touched this level, it reverse. Again, it touched the same level, it reverse. But here, okay, guys, can you hear me?
Yeah, bro. Yeah.
Oh, is everyone, can you hear my voice?
Yes, I hear you.
Okay, look,
What is that?
the network, went off. So they tried the nonsense again at this time. So I'll change it to another network. Okay. Okay,
You
guys.
were tripping.
What do you say?
I said you were off. You were going off and on, but you're okay now.
Yes, I'm okay now. I'm okay now. It's the network that is okay. So when I say buyers and sellers area, you can see in this type of situation, this is a ranging market. So at this time, the market has been ranging for some minutes. That is, the ranging market started from here. Okay, for me. The ranging market started from here, and then it went up again, reaching this level, and it reversed. So also on the right side, it also went up, but it didn't reverse because of some reasons. Because of some reason, I will explain the reason to you later why it didn't reverse. So as I was saying, that At this time, in this kind of situation, the sellers are here and the buyers are here. The sellers are here, the buyers are here in this kind of situation. So in this kind of situation, that means anytime the market approach the seller's area, you should be ready to place put option. Or anytime the market approach the buyer's area, you should be ready to place call option with some reasons. Now let me explain to you why this candle, this candle didn't reverse, and why is it that the next candle form a strong green candle instead of to continue, it still reverse. So I will explain to you. If you look at it, that's why I say observation is very much important in trading. When you observe the market movement and when you observe what the market is doing, then you can place your trade with confidence. Look at here, look on the left side. You can see that here, when this candle close, this bullish candle close here. The next candle open here. The next candle open, maybe the buyers still want to try to go more up, but on reaching this level, they got rejected from sellers. So at this time, the sellers are here. The sellers reject the market, went down again, reaching this level, they got rejected from buyers. So at this time, the buyers are here. The sellers are here, the buyers are here. So if you remember the video I uploaded some days ago, you will see that this video, this what I just explained now is among it. Let me show you. Here, the sellers are here, the buyers are here. Because the buyers try to reach this level, but on rejecting or reaching this level, the sellers reject the market. Same thing here, the sellers try to reach this level, but reaching this level, the buyers reject the market. So it means that the sellers are here, the buyers are here. Now look at where this candle closed. This candle didn't close as a bullish candle. It didn't close as a bullish candle, means that because the trend is downtrend, that's why I say always follow the trend. Because the trend is downtrend, that's why you're seeing a next candle forming a bearish candle. Now look at the right side, you will see another different situation. So I'll just explain to you on this level. So let's go to the right side. Look at it, that in this scenario where this candle closed, sellers entered, forming a bearish candle. It means that here, from this point to this point, this closing point of this bullish candle, this closing point, it means that at this area, this from this point to this closing point of this bearish candle, let me indicate it well. This line I draw, sorry, this line I draw, and this line that I draw, that means from here to here. That means the sellers are dominating the market. So you now see that if any buyers should come to this area, you can see that this bullish candle close inside the seller's area with a rejection. If it close inside the seller's area without rejection, you can go with buyers. But here, it close inside this area with a rejection from sellers, because this line and this lower line is where the sellers are waiting to sell the market. This candle close at that area with a rejection. That's why the next candle form a bearish candle. The next candle form a bearish candle. You can see that the buyers still want to push the price higher, but on reaching this area, this seller's area, the sellers still reject the market. The sellers reject the market and then close as a bearish candle. So it means that from this area, this is seller's area. So it means that here to here, this is seller's area. Now look on the left, on the right side. What happened that let me show you. What happened that this candle didn't reverse when it touched the level, when it got rejected from the seller's area. Got rejected from the seller. So you can see that anytime a bullish candle appear on this level, it always got rejection because this is not seller's area.
Device is ready to pair.
I'm coming. Give me some minutes, guys.
The video mode. Aux input mode.
Okay. So why is it that this candle reached this area didn't reverse? Because you can see that all this one with the seller's area with the rejection it reversed, but this one, even with this strong rejection, the candle still didn't reverse. Why? It's because number one, if you observe the market is moving. The market is moving like a ranging form, in a ranging market. This is a ranging market. So number one, if you look at this, look on the left side. That's why I say observation is very much important in trading. That is the first thing I do before I place my trade. Once I see any time that I'm expecting the market to reverse, then I will look on the left side. What happened? Look on the left side, you can see that here we have two bullish candles. On reaching this level, the sellers enter. Again, this buyers the sellers enter, put the price lower to this level. Then buyers try. Then buyers try again the second time with how many candles? 3 bullish candles. But on reaching this level, the sellers enter. Sellers put the price lower. Then buyers enter again the third time. And if you look at it, the third time that the buyers entered, you can see how many candles that form to that level, telling you that the strength of buyers is increasing. That is, the strength of buyers here are just 2 bullish candles, but couldn't break this level. Again, their strength again increased to 3 candles, but didn't break this level. But now you can see that they try very strongly with how many candles? About 6 candles. On reaching this level, it showed a full confidence that the market will not reverse. And if you remember what I said, that so you should not get confused, always observe the market. If you remember what I said, that anytime you see a candle like this, and the previous candle is very small, it's very weak, you place put option. But in this kind of situation, don't place put option because this is a ranging market. And what the market is doing, the behavior of the market now is that the buyers are testing this level. That is the behavior of this market, this ranging market. The buyers are testing this level. So they test the first time, they couldn't succeed. Test the second time, they couldn't succeed. But here they test the third time. They only succeed by crossing the area. But not this kind of candle you should expect to continue the buyers. So for the buyers to continue. This is an exhausted candle. That is, after it broke the previous seller's area, the candle got rejected from sellers, so sellers enter. So at this time, sellers enter very strongly, telling you that the sellers are still active here. So this time, this candle couldn't reverse because of this momentum. You can see that the momentum here is more than the previous momentum. The momentum here is more than the previous momentum. So at this time, the buyers will not reverse the market. And if you can see that this candle didn't close at the seller's area. but it tried to reach this level, this seller's area, but rejected from seller. So at this time, the sellers couldn't make a bearish candle. The sellers couldn't make a bearish candle like this one with this strong rejection, and the sellers make a bearish candle, then it reversed. But here, the sellers couldn't make a bearish candle. It only got rejection from sellers, but the candle didn't stick close at the sellers area. So at this time, the buyers will not quickly reverse. The buyers will form at least one candle. Most of the time, I usually say that at least 1 minute or 2 minutes. So it depends on how this candle, the next candle will form. If the next candle will form something like this, if this candle, this bullish candle that form here, if it forms something like this, I will go with buyers on the next candle. So I will not go with sellers. You can see that this, if you compare this candle was already formed 2 times on 30-second chart. On 30-second chart, you will see these 2 bullish. You can see these 2 bullish candles. That means if the market should form any of this candle or a spinning top candle, buyers will not reject. You can see that on 30-second chart, the market reached the seller's area, but it didn't close with a rejection. That means the buyers are strong because the trend is uptrend here. The buyers form a bullish candle. So on 1 minute chart, is showing us the same thing. That this rejection we are seeing here is a sign that the sellers are present. It's a sign that you can see on 30-second chart. This rejection. Look at this rejection. This is rejection that we saw here. This is seller's entry. So sellers couldn't make a strong bearish candle at this area because if you look at it, you can see very strong bearish candle here. Very strong bearish candle with a selling pressure. But here, this is another different situation. A weak candle compared to previous bullish candle. So buyers enter. So the way I trade is that I usually look at the market. I join both 5-second and 30-second knowledge together when I'm taking my trade. That means if I am on this level and I want to take my trade, my mind will quickly go reverse. Not that I will check it on 5-second or on 30-second. Not that I will check it, but my mind will quickly go and reverse that this rejection I'm seeing is a bearish candle. This rejection is a bearish candle. But I look on the left side, I'm seeing very strong bearish candle. Here, I'm seeing a very strong selling pressure. But here, I'm seeing very strong rejection, but it's still a bearish candle. But my mind will tell me that on 30 seconds, this rejection is not enough. So in this kind of situation, the rejection that we should be expecting here is this kind. Let me show you. Yes, like this rejection, this very strong rejection. That is the rejection you should be expecting here. So the market couldn't reverse because of the momentum and this candle that formed. There is no enough rejection from sellers to reverse the market. That's why the next candle formed. But this candle that formed now shows that the buyers are exhausted. This exhausted candle, it formed across the sellers area. That's why I say that 70% chances that if the market cross buyers or sellers area, the market will reverse once you see a confirmation. This confirmation here, you can see it on 5-second chart or 30-second chart. You can see that there's a bearish candle telling you that the sellers that are here are also present here. But because this is a reversal candlestick, so the next candle will be bearish. Okay. So as I was saying, when you are trading on buyers and sellers area, try to observe the market. The market is ranging here. So at this time, I knew that the market is ranging, but I would have drawn my line like this. Can you still hear me? Because someone said no voice that they didn't hear.
Yes.
Okay, no problem. So I think if you check your side there, my voice is clear. Okay. So at this kind of situation, when you are placing your trade, try to check what the market is doing and try to observe. Don't just say you reach this level, the market reaches level, then place put option immediately. And what happened? The market form is even a strong bullish candle, telling you that the sellers not enter. So you should observe that the momentum here, I see momentums. I also see momentums. I see momentums here. The buyers are weak here. They are becoming stronger, but at this time they become more stronger than previous momentum. So at this time they will not respect this level. They may respect the level if the market cross it. If the market cross the level with a rejection, that means they will respect the level. Okay, so now in this kind of situation, when you want to draw, I'm just using this range market as explanation. When you want to draw your buyers and sellers area, now look at it. For me, let me show you. Let's say in this kind of situation, now you want to find the sellers area, this kind of situation. You want to find the sellers area, this kind of situation. The first thing you do is one, look at the market. Look at the market. Most of the time, the market move like this, like this, like this, like this, like this, like this. Or the market move like this, like this, like this, like this, like this. So at this time, maybe the sellers are entering like this, and the buyers are entering like this. Same thing here, the sellers are entering like this. The buyers are also entering the market like this. So at this kind of situation, once you observe the market movement like this, you should know that don't say you want to place horizontal line on this level. That means if the market should read this horizontal line, the market will reverse. This is not how the market is moving. This is not the direction the market is moving in this direction. So in this kind of situation, if you want to find buyers and sellers area, look at it. The market, this is sellers area. That is the sellers enter from this level. Then the sellers entered from this level. After this small rejection, sellers enter. Again, the market, the buyers cross the level again. Sellers enter. That means here and here. This area is a seller's area. Again, buyers cross the level, cross this level, then sellers enter. That means this area is a seller's area. Then again, buyers again cross the level, then sellers area. The sellers enter. That means from here to here, this is seller's area. Okay, let me show you. From here to here, here to here, this is seller's area. Then again, buyers also cross this level and sellers enter. That means this from here to here, this is seller's area. Again, buyers cross the same level and then sellers enter. That means from here to here, this is seller's area. Now, you should not observe that the market is now moving in this direction. Either you draw from here or you draw from here, just to connect the seller's entry point. So you should know that the market is moving in this direction, not horizontally, not horizontal direction. Same thing is happening on the lower side, that is where buyers are entering the market. So you should know that the market is moving in this direction. Look at here, you might be expecting that the market should reverse here. Reverse when reaching this level with a rejection, it should reverse. It cannot reverse because this is not how the market is moving. can see the market, the buyers become weak, the sellers enter. That means from here to here, the sellers are there. From this level to this level, the sellers that are there. Now look at it, the bullish candle. That's why I say level. If you check all the previous class I told we have taken before, I told you that level tested multiple times is tend not to be useful forever. That means if you use a level more than two times, that level will not be used again. That means let me say, to be on safe side, you should use a level at least once or twice. At least once or twice. Don't use it 3 times. Okay. Now you look at this kind of situation. The sellers enter from here, and again the sellers enter from here. That means here and here, this is sellers area. So you should know that the market is moving like this, not horizontally. That means at this area to this area, this is seller's area. So if any buyer should come to that level, the sellers will enter. Okay. So market was here. So any time that the buyers will enter the level, the sellers will enter. So at the same time, if the market is moving like this, if buyers should reach this level, the sellers will still enter. Now, that is all about buyers and sellers area. Then another one is this. And this will give you a short trades when you are trading. Another one is this. Let me show you. If you have candles, more than one candles, that's a strong buyers area. That is, these candles, this market, we have four buyers entry from this level, 4 bullish candles from this level. That means this is a strong buyers area. So if you have more than 2 candles or 1, that is a strong buyers area. The same thing here, you can see that the sellers entered, but on reaching this level, the buyers entered. So the same thing here, the buyers enter very strongly, the sellers entered, on reaching this level with the rejection, buyers enter. But here, in this kind of situation, this is not a strong buyers area. This is not a strong buyers entry. Strong buyers entry is when you have more than 1 candles that entered from the levels. Here we have 4 candles. That means this is strong buyers area. Here we have 3 candles. That means this is strong buyers area. Same thing on sellers area. More than 1 candles. Like this one, don't count this as a strong sellers area. Just count it as sellers area because the sellers entered from here. So just count it that this area is a strong sellers area. But when you are counting, when you are analyzing the market, you should not count this single candle as strong. You can only count it when you have up all this, the second area, like this. If you want to take this as an area, a seller's area, that means you draw your level like this. Let it touch the body of the candle. So that is when you are trading on buyers and sellers area. But when you are trading on buyers and sellers entry points, it should touch the wick. But here you are trading on buyers and sellers area. That means the sellers entered from here. So let it touch the body of the candle. And here also the sellers entered from here. So it means this level is a strong sellers area. This level is a strong sellers area. Okay, the market is not there. That means this level that we have drawn is a strong sellers area. So if buyers should come to this level, the market will reverse. Now, look at this. We have buyers movement. I want to show you something. We have buyers here. buyer's entry, buyer's entry, buyer's entry. Now you are expecting that the market should reach this level before the sellers enter because this is a momentum. No problem? Because this is a momentum. So you should not say maybe the candle, the buyer should reach this level, then sellers will enter. Not that way. The sellers will enter at any time once you observe the market. The sellers may try to enter from this level or may enter like this. So in this kind of situation, when you have your sellers and sellers area, sellers entry here and sellers entry here, that means when you're drawing your trend line should touch both the first one and this. So that means you touching this first one and this. That means if buyers will come to that level, sellers will enter. So at times, if this momentum is very strong, the sellers might change their entry to this level, but they may enter. So not this level, you should be waiting to see sellers entry, but here, because we have the first seller's entry, second seller's entry. So when you are drawing your trend line should touch both the first one and the second to find out the third seller's entry. That's why I make mention of 1, 2 move. Don't count this as 1, 2 move. Let's say the market is here. Okay, there's one thing I want to show you. Don't count this as 1, 2 move. 1, 2 move. This is where the third move enter. So the third move entered before here because here we have the first seller's entry, second seller's entry. Now we draw our trend line. Our trend line was here. Our trend line was here. That means this is the third move. So at this time, this area that we have drawn, this seller's entry, that means if you want to take risks, you should use it once again. But here, I will only recommend you to use it the whole time like this. Use it the whole time like this. Most of the time, if market should come to this level, it will continue going up. And even continue going up to the extent that we didn't expect that the sellers will enter. It will continue going up because this level has been tested. This level has been tested multiple times. So at this time, the buyers will continue the market. If they reach this level, they may try to take some trade before they continue, just by testing the level. If the level is strong, you can see that the market will try to be bouncing from that level, bouncing, but later it closed. Instead of seller's entry, they form even a strong bullish candle, telling you that they don't respect the level again. So you should only use this level 3 times. That is, once you find the first move and the second move, then the third move, you should use it. Don't use the fourth one. The fourth one might break it because why is it that the fourth one will break it? Because the market might go down, then coming back with a strong full force. So it will not respect this level. So it will continue going up. So at this kind of situation, don't trade horizontally. Don't trade horizontally. Most of the time in the market, we always see trending market like this. Let's say 80%, let's say 70% most of the time. But the many percent, the other 30%, the market is always ranging. That's why so many people are missing out. Because they always want to be trading ranging markets. That means the market should read the resistance, but they never know how the market is moving. So knowing how the market is moving is very much important in trading. Now look at here. Like here, we have found our first and second move, then the third move works. Here, look at this kind of situation. If you want to take risk, don't trade on this kind of situation. This kind of situation. This is a consolidation area where we have the red pattern, green, red, green, red, green, red, green, red, then red again, green, enter, buyers enter. So in this kind of situation, don't trade. Don't trade in this kind of situation. Reason why we have this pattern is because if you check on the left side thoroughly, you will see that the buyers and sellers are not far from each other. They are very close to each other. That's why we are seeing all these consolidation markets here. They are not far from each other. That's why the market is moving like this. But most of the time, the market usually forms a long-ranging market. That means the sellers and buyers are far from each other. So at this kind of situation, the sellers and buyers are not far from each other. So it is better to avoid this trade. Don't take trade here. Don't take trade whenever you see this kind of pattern. So it is better to avoid. It is better to avoid so that not to lose your money. Okay. So now let's move on to the second buyers and sellers area. That is using the wick. Change the wick. So I'm looking for a ranging market. All these markets, they are diagonal ranging markets. So I'm looking for horizontal ranging markets. This is the most worst thing about OTC markets. So whenever you see this kind of situation, don't take trade here. Why? Because we have green, red pattern followed by greens, then one red, greens here, but now market start forming green, red pattern, green, red pattern. So in this kind of situation, avoid it. Don't trade. So I'm looking for horizontal ranging markets. I want to explain more about buyers and sellers area. So I want to show you more about how to trade. Okay. Now, look at this market. We have this here, from here to here. This is a ranging market. That is from here to here. The market is ranging. And inside this ranging market, you can see the few small diagonal movements, like trending market. More like buyer's entry, seller's entry, buyer's entry. But here, if you look at the whole chart very well, the market starts ranging from here and like this again, like this, like this. So let me use the horizontal line. If you want to draw your sellers, the support and resistance level here, the first thing you do, look at where the market reach. So I'm showing how to draw area. I will explain to you why I use the two lines as the area. So now I have drawn my resistance area and the support area. That means at this resistance area, the sellers are waiting to sell the market. At this support area, the buyers are also waiting to buy the market. Why I draw this area? Because from here, the market starts ranging. That is, on reaching this level, the sellers enter very strongly because the momentum of sellers ended here. The momentum of sellers ended here. That means at this time, the market starts changing. You have never seen on the left side a strong move, a strong power move like this on the left side. It is only here, you can see this one and this one. But here, a strong power move to this level structure. So at this time, the sellers ended their journey. So the market starts printing. That's why I choose this level as the first entry of the ranging market. And here I choose this level as the last entry of the ranging market, the last entry of the ranging market. Here, the top side, the bottom side, I choose this level as the first entry of the ranging market. And this one also, the first entry of the ranging market. So at this here, from here to here, that means the buyers are here. From here to here, the buyers are here. So if you want to draw an area, this is how you can draw an area of support and resistance on your chart. Area of support and resistance of support and resistance. This is how you can draw it. So it is not by drawing only one line. So whenever you see me trading using one line, I already know where I will place the second line. So it's not a big deal for me using one line. Same thing inside this ranging bound area, you can still find some ranging markets, some ranging market inside it. Okay. Like it, that means the market is ranging from here to here, from here to here, from here to here. So here and here, this is the resistance area. While here and here, this is the support area. So if market should approach this level, you should take note of how the market approach these levels. Take note of it. Don't just say once the market approach the level, the market will reverse. No. Take note, observe how it approach the level, and make sure you place your trade with confirmation. Here, let me use the first. Let me use the first area. Okay, go ahead. You can speak out if you want to.
Okay, sir. My question was about, although I see you have removed the lines, the second set of the resistance,
Okay.
you have already removed. I wanted to know how you arrived.
It means something.
I wanted to know. I wanted to know you arrived at the second, that one you have drawn.
Okay, you want to know why I placed my line here?
Yeah, how you arrived at placing that line.
Okay, the first thing I do is when I see a strong seller's movement, a strong seller's entry like this. So I take it as seller's area. That is, the first one is this, and second one is this. That means this. That means if buyers should come to this level, the sellers will enter. So I take it as the resistance area. Same thing, the downtrend, like this one, the lower trend, the lower support level. That is, from here, the buyers entered. That means I use this also as the buyer's entry level. I use this also as the buyer's entry level because here the buyers enter. The candle crosses, buyers again enter. But here, buyers entered very strongly. That means I use this area as the support area. This one as the resistance area because sellers entered here, sellers entered here. So I'm not using one bearish candle. I'm not using only like this one. I'm not using this one bearish candle, but I'm using candles that is more than one to make it strong area. So when you want to draw your area, you can even use this one. You can use the top side as your area, okay? This one because it is more than one candle. And this one, the second one. That means it's more than one candle. So if market should reach this area, the market will pass. And you can see that because of this is a strong level, the sellers also respect this level when the buyers break it. Okay, now look at it. I have drawn the area. So if you want to draw your trend line should be touching this. Your trend line should be touching this. So if buyer should touch any of this level with a strong confirmation, like a reversal candlestick or a weak candle, the sellers will enter. So in the
Teacher,
future, buyers will also test this level in the future, just to test if the area is still strong. So you can see that they test the level so many times here. They test it so many times just to test this level if the level is still strong. So I have drawn the area by touching this and this. So I draw my trend line by touching this and this just to confirm the third one. So
I
that
still have a question before you delete.
yeah,
Sir, before you delete, I still have a question. Yeah, just leave that.
okay.
I was hoping that just let me draw something.
Okay.
I was hoping that this line should touch this candle, the opening of this candle.
Okay.
I was hoping that line should touch the opening of that candle.
You mean the opening of this bearish candle?
Yeah, as in the line should come lower. I thought the line should come lower.
Okay, you mean like this? You mean something like
No,
this?
above. But yes, I thought so. I thought so.
Yes, it's the same thing.
Okay.
Same thing. Once you touch the body, then you can
Okay.
find the next area, the next seller's area by touching the body. So it's the same thing. There's no problem with that. When you, even though, but to be on the safer side, let it touch the lower candle. So you can see that buyers are buyers are the top side above this bearish candle. So when you want to place your line, let your line be like this, touching the lower bearish candle. Like this, touching the lower candle. So here, the candle, like this kind of situation, look at the bias is more above than the seller's candle. That means if you when you place your line, let it touch the lower bearish candle. Because once you touch it, it's touching the opening price of this candle and also touching this bullish candle, telling you that it's touching both of them. But if you just place it on this, only this bullish, it's only touching the closing price, but not touching the body of the bearish candle. So the market might even fake you by reversing. So you might think that you're supposed to reach this level, you didn't reach this level, but it reversed. But you never know that it's already touched this seller's body, thereby having a rejection from sellers. So the market reversed. So to be on the safer side, let it touch the lower. That means anytime you see candle like this is a bullish candle, and again a seller's candle, that is bearish candle. So if you want to place your line, let your line be like this, not like this. But if you want to draw an area, you can start from here and draw your second line here. See the same thing, no problem. But to be on the safer side, let it touch the area like this. That's why most of the time you see me placing using one line as an area, because I already know how it will cover the second line, the second level, if I want to draw second line. So, okay, as I was saying, when you want to find out the seller's area and buyer's area in this kind of situation, check the strong bearish entry compared to the strong bearish entry. That means when you choose this one and choose this one, that means this is seller's area. So you can even use one turning point as buyers and sellers area, something like this. Something like this. Let's say we want to use this as sellers area. Let it touch the lower handle and let it touch the upper width. That means this from here to here, this is seller's area. From here to here, this is seller's area. So you can use this Same techniques, same logic as your sellers, buyers and sellers area. Once the candle, the buyers close at this area with a rejection, so the market will reverse. But if the momentum is strong, the market will not reverse. So in this kind of situation, you can draw your area like this as the seller's area. Same thing here, just like this one. Now look at this one. Look at this. This. So from here to here, you have drawn your seller's area. From here to here, you have drawn your seller's area. That means the buyers should come to this level, the sellers will enter. And after you draw your area like this, on the right side, you can see it become a support, even a strong support. That means this area you have drawn, you can see that this is a strong area where you see strong bearish entry. That is, this is a strong seller's area. But here, the market crossed it. Buyers, strong bullish candle cross it, telling you that the buyers now dominate the market. So if bearish candle should reach this level, the buyers will still enter. Same thing here. Same thing here like this. So you have drawn your seller's area. So you can see that buyer tested the level multiple times. Reaching this level, the sellers always reject, telling you that this area is a strong seller's area. So you can see that buyers cross the level with a rejection, the buyers entered. The reason why buyers entered here, because buyers break the level, telling you that there is opportunity for the sellers to enter. Buyers break this level, telling you that there's opportunity for the seller. If you see a buyers or sellers area, and if a seller's area break, if a seller's bearish candle, if a bearish candle break the buyer's area, telling you that means the market is telling you that there is opportunity for that level to reverse. You can see here, this is seller's area which we have drawn, but this bullish candle broke the level with a rejection, telling you that the sellers are here, the sellers are also here. So where will this bullish candle escape? This bullish candle cannot escape because already it has crossed the seller's area. And again, there are some sellers that are waiting here. So they reject the market. So it will not escape. So it means that the next candle will be bearish. There is more opportunity when you are trading on breakout of buyers and sellers area. That means if the market breaks the buyers and sellers area, the market always reverse. So you should take note of that. But I'm not telling you, I'm not saying you should always trade like that. You should not trade, put your 100% focus to be trading such. But try to analyze why the market reverse. Try to analyze, because here we can see very strong, like this bearish candle you are seeing here. If you check on 30-second chart, you will see that it is a momentum. You can see it's a momentum. Check on 5-second chart. You can see it is a bearish movement. From here, you can see from here to here. So it means that there's a strong seller's entry from this level. A strong seller's entry from this level. So when you are trading, that means if buyers should make attempt to cross this level with a rejection. If any bullish candle make attempt to cross this level with a rejection, there is a chance for the market to reverse. Look at this. This is, let's say we want to use this one as the seller's area now. Draw your line here, second line of the week. So it means that the sellers entered here very strongly. But let's see, you can see that after this candle, this bullish candle, cross it, with a rejection, the sellers enter, telling you that there's no way, telling you that there's no way that this bullish candle want to escape. This is a strong seller's area. It crossed the level with a rejection. So there's no way that it will escape. That's why the sellers enter. And the sellers entered with a reversal candlestick. So your mind should be following how the market is moving. Here, the buyers break the level with a rejection, sellers enter. Sellers entered with a reversal candlestick, sellers entered again. So it means that the market is showing a sign that the sellers want to go more down because of this candlestick, this bearish candle. This bearish candle is a sign that the market wants to go down. Here, the sellers are here. This candle broke it with a rejection. Sellers entered. Instead of sellers to enter like a Marbozu candle, like a reversal candlestick, that is a continuation of this bullish trend. But instead, they form a hammer candlestick, a sign that from this seller's area, the market wants to go more down. So you should know that the market is moving in such a movement. That means the market is trying to go down just to respect the level. Okay, it will not reverse because of this momentum, Now you're saying that the market didn't reverse when reaching this level. The market didn't reverse. This bullish candle didn't reverse when reaching this level. Check. There's a momentum, a bias movement, power of bias. 2, this candle didn't have any lower rejection. That means the sellers are not interested here. 3, the rejection is not enough. You can see very strong rejections here. Strong rejections from sellers, strong rejection from sellers. But here, you are seeing very small rejection. So this rejection is not enough. This is a strong bullish candle. You can see that where this candle, the previous candle even doesn't have any sellers activities. No lower rejection. That means this candle and this candle, the sellers are not interested in this candle, in these two bullish candles. This one and this one, the sellers are not interested. So it closed at the seller's area. It closed at the seller's area with a very small rejection, not long, strong rejection like this. If this rejection is like this, the sellers will enter. But here, very small rejection. From here, if you check on the, let's see, on 30 seconds. On 30 seconds, you will see very small bearish candle. Or you might not see any bearish candle here. You can see there's no sign of sellers on 30 seconds. On 5 seconds, you can only see, on 5 seconds, you can only see very small bearish candle. You can see very small bearish candle. But if you check this area, you'll be seeing very strong bearish candles. Here, you can see very strong rejection. Very strong bearish candle. You can see strong bearish candles here. But here, we can only see 2 bearish candles when the candle close. So at this time, the sellers will not enter. This rejection, the rejection you are seeing on 1 minute is this 2 bearish candle. So it's not like the same bearish candle on the left side. It's not like the same strong bearish candle. But we can see so many sellers enter here. That's why the sellers enter here. But here, only 2 bearish candles. So the market will not reverse because of this momentum, and the rejection is not enough to go with sellers. That's why the market didn't reverse. Instead, you can see there's even no sign of seller to reverse the market here. Okay. you can see that this candle close, buyers enter very strongly, telling you that the sellers are not interested here. So it means that this area now, the sellers are only interested here by entering, by rejecting this candle, but not enough. But here they are not interested. So it means the candle cross it, the sellers reject the market. So there's more possibility that at this time the seller that is here, they are changing their entry from here to here. So this candle will not escape. This candle will not escape the seller's entry. So that's why you see that the sellers entered very strongly. And if you check on the left side, you can see that there's a level also where this bullish candle close. There's a level where this bullish candle close. So there's no way for this bullish candle to escape. The level is here. The level is here. So there's no way for this bullish candle. You can see again it crosses with a rejection. If you want to draw an area here, if you want to draw an area, there's no way for this candle to reverse. There's no way for the buyers to continue. The confirmation candlestick is something like this. Let me draw it for you. You want to find a confirmation candlestick. Let's say this is a level, a resistance level. This is a support level. Here we have some seller entry here across this level. Then buyers entered again. Buyers entered on reaching this level. It reverse, market reverse. Buyers entered again, but on reaching this level, the market now forms something like this. Rejection, something like this. And the previous candle very strong again. Strong rejection. And we can see buyer's momentum. Buyer's momentum. That is, at this kind of situation, the market will not reverse. The market can only continue for once, that is forming a bullish candle for 1 minute, then before it finally reverse. But here, the market will not easily reverse here. Because number one, we can say there's a rejection and a level and a downtrend. So the next candle should be bearish, but the market will not reverse because number one, there's a rejection, right? But the rejection, if you want to compare that, if these sellers will enter with this rejection on the next candle, what of this backup bullish candle? What is this doing here? And what of this momentum, the power of buyers? What are they doing here? So it will not allow the sellers to form a bearish candle because the forces starting from this strong backup and buyers movement. So the forces started from here. So at this time, the market will not reverse. The market might likely to form a bullish candle at least 1 minute before it finally reverses. So when the backup candle is stronger than the current candle, the market will not reverse. But if you see something like this, and the backup candle is very small like this, let's say something like a spinning top candle, something like this, the backup candle, and also the current candle got a rejection, a very strong rejection, and even for a weak body like this. So you should expect that the market will reverse. So at this time, the market will reverse. because the backup candle already showed weakness of buyers. That is, already shown that the buyers reach this level and become weak. So the buyers will not hold the market to form the bullish candle again. So the sellers will enter. The sellers will enter on the next candle because the buyers are not strong enough to back up this bullish candle because this is a level. So if you see a strong bullish candle that form, that means this is a strong backup. So at this time, in your confirmation, if you go on 5 seconds, you will see that there are some strong sellers entry here. There must be some strong sellers entry, but because of this backup and the momentum, the market will not easily reverse. So let's check that on the chart. So I'm trying to find level. I'm looking for what I just explained now because most of the time it happens. So I may not see it now, but anytime I see it, I will explain. Now look at this kind of situation. Here we have the support level. We have the support level here.
We can't see, sir.
Which one? Which one? Is it the chart?
We can't see the chart.
Okay. 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 This, can you see it now?
Yes.
Okay. Now look at this. This is a support level previously. Now became a resistance level. So at this time, the buyer should enter at this area because here we can even count this. The buyer should enter at this area, the market will not reverse. You can see that buyers entered very strongly, crossing the level, very small breakout. The market didn't reverse. Instead, buyers continue. Now, buyers continue on reaching this level. On reaching this level, you can see that after this rejection, let me show you this level. This support level. So after this candle closed with a rejection on this level, the market didn't reverse immediately. Instead, it formed a very small coming to that. Instead, a very small bearish and bullish candle, telling you that the backup here are very strong, not to reverse, not to allow the sellers to enter the market. That's why it formed a bullish candle. And instead, after that bullish candle, next candle was bullish. Then sellers entered. And that means at this area, no sign of sellers. So the market will continue. So this is a continuation sign in the middle of this bullish movement. So the next candle will be bullish. Now, if the candle show a sign of reversal, a sign like a hammer candlestick, Mariposa candle, or weak a spinning top, the market will reverse. Okay. So now there's a question now that says that how do you know if the momentum is strong? If the momentum is strong, you will know Okay, let me show you. We have a strong momentum here. We have another momentum, but you can say it's very strong because the candles are more than two. Here also, we have a strong momentum here. A strong momentum. A strong momentum. Here, a strong momentum. So now, if after a strong momentum and the candle approach or any level, that level without momentum will not allow the sellers to enter. We have a level here, I think so. Yes, we have. Yes, we have a level. Let me draw it anyway. This level. Okay, let me show you where I place the line so that you cannot get confused. I place the line because buyers entered in twos. Here also buyers enter in threes. So that is a strong level. I can even choose another one like this. Buyers enter in twos. And this one. That means from here, these two lines are drawn is a level. You can see we have so many levels here. So you have to choose the most decent level. And what happened? The market got rejected from sellers on this same level. But what happened? The buyers continued. I know I'm coming. Let me just explain about sellers and sellers, buyers and sellers. Here, you can see the market got rejection from that level, but it didn't reverse because the momentum is very strong. How do you know the momentum is strong? But one, look at the candles. Look at the body, the candles that are forming, the body of the candles that are forming. Like most of the time, the market usually form candles like this, starting from very small candle and becoming big candle, and then become bigger and becoming bigger. That means this momentum, the buyers are becoming stronger, starting from this candle. So the buyers are becoming stronger. Same thing, if the power of buyers are becoming weaker, it will start from big candle, small candle, small candle, small candle. That means here the buyers are becoming more weaker. But here, look at here. You can even count this as one of, if you check on 5-second chart, you can add it to it as your momentum. That is the starting of the momentum. But here we can see that the buyers are becoming more powerful here. The body, look at the shape of the candle. But here it reaches this level, telling you that the buyers are now powerful. So it will not respect this level, no matter how, even though there's a seller's entry here and this candle close at the level, it will not respect because you should give chance for the buyers to continue their level because the buyers are becoming more powerful. So they will not respect the level. But in a sort of situation like this, whereby after strong candle followed by a small candle, that is their strength are reducing, that means if they approach this level, it will reverse. So this is a strong momentum, while this is a weaker momentum. Okay, so that is all about buyers and sellers area. All about buyers and sellers area. So there's one thing I want to show you that I will always advise you that whenever you are trading, try to observe the market. You will notice that all the trade, the last video I uploaded, all the trade I took was only on hammer candlestick. And most of the time, hammer candlestick is a continuation candle and it also is a reversal candle. All the candles that you can see as continuation or reversal candle, they work on both, but different market situation. So they work on different market situation. Like now, don't expect this is a ranging market. The ranging market started here, but the market is not ranging at this time. So if market should come to this level, you can see that the sellers entered here. You can see that the sellers entered here. The sellers entered very strongly. And what happened? Buyers reached this level with a rejection for leading to that. So it means this market is not ranging. Try to observe the market movement. The market movement is this. This is how the direction the market is moving. The market is moving like this. The market is moving in this direction. In this direction. That is here, the sellers entered. Here, the sellers entered. Here, the sellers entered. Here, the sellers entered. Here also, the market reached this level, the sellers entered. So it means the market is moving in this direction, not this direction, not like this. Most of the time, the market will fake you, will trick you, telling you that this is horizontal area, whereby you place your trade. That means they are expecting the market to do that, but the market is not moving that direction. So observing the market direction is very much important in trading. And this one also, you can see very clearly that we have lower high and lower low. Lower high and lower low. Lower high, lower low. Lower high, lower low. Lower high, lower low. That means this level, the market, this structure, this is how the market is moving. The market is moving in this direction, from the lower high to the lower low, lower high to the lower low, lower high to the lower low, again from lower low, then the market broke that movement. So you should not expect that the market should be moving in a ranging mode. Don't say this is seller's area. Don't say this is seller's area when you don't have any seller's entry here, because we have some seller's entry, means that we not take it as seller's area. But if you only have a seller's entry like this, where the market is forming lower high, lower low, you only have this seller's entry without this, then you should not take it as a seller's area, because this is not how the market is moving. The market is moving in a diagonal movement. But here we can see some seller's entries here telling you that this is now seller's area. This is now seller, because we are confirming 1, 2 move. You draw your trend line, you get it. Or you can even use the horizontal line this way. So the 1, 2 move. So you should not say this is horizontal area when you don't have this. Try to observe the market. This one is same like this. The market is only like this and like this. So you should not be saying this is when the market will reverse, because you can see that the buyers reach, the sellers reach this level where buyers entered very strong. Here, buyers entered here, but what happened? The sellers reach the level, or it didn't reverse. Why? Because the market is not moving in a ranging. This is how the market is moving. The market is moving like this. The market is moving like this. If you check, you can see that it's very small. That is, we have a movement like this. That's very small. If you check on 5 seconds, it is not small. Look at 5 seconds. Look at what the market is doing on 5 seconds. You can see very strong candles. But on 1 minute, it looks like very small. So that is how the market is moving. The market is not moving in a ranging market. So the sellers will not respect. This is where the sellers will only respect level, but it broke the level. So it broke it. When it broke this level, what happened? Market continued going down, telling you that the level has been broken, not this. So another way is that the starting of the level and the ending of the level in this direction, in this diagonal movement, you can use that as your buyers and sellers area. Look at here, the market started from here. You want to draw your line very well. The market started from here like this. Lower side. The lower side, the market starts like this. So that means if you want to choose your level when the market will reverse, choose the first, that is the ending of the diagonal movement. This one. I trade on this strategy some days ago. I think maybe I will place the trade. I will trade like this again. I'll make a video on this. We choose the end of this diagonal movement and choose the beginning of this diagonal movement. So it means this is the level that the market will expect most. This level, these two, this resistance level and the support level. So this is the level the market will expect most. The market will not respect any of these levels. We have a level here. We have a level here. So the market will not respect. The market will respect either this resistance level or the support level. You can see the market respect the support level. You can see the market also respect the resistance level. But respecting the resistance level didn't close the rejection. And there's no rejection here. We only have weak candles. But the backup candle is very strong. So seller center, it's a new high, a continuation sign. The buyer center, it's a reversal candlestick. So sellers enter. That means this level is very strong level. Why this level is very strong level? So in all these minor levels, the market will not respect it. The market will not respect it. So if you choose the ending of the diagonal movement and the starting of the diagonal at your strong level. You might see me trading like this, but you never know where I trade. I make a video on this some days ago, like this, and you can see this is starting of this movement, and this is the ending part of this movement. So if you choose all this as your strong level, this and this. The market might be respecting level of this level. Maybe on the left side, there's a ending and starting level. That's why the market will be respected. That's why most of the time you don't see me using previous level as my level. I always go back to the previous level to choose a strong level. So the starting of this diagonal movement, it should be your strong level. So if market should approach the level, the market will reverse on a strong reason. Here, you can see that the market didn't reverse here. The market, because the rejection is not enough. So if you check the rejection, how the rejection is tested on that level, the rejection here is very strong. This one is very strong, but here it's not enough. It just close at the level. And because the trend is downtrend, so the more possibility of sellers forming a bearish candle is more than buyers. Buyers, you can only say level and strong rejection. For the sellers, you can say downtrend, strong bearish candle, the rejection is not enough, and what again? Any possibility, then the sellers will enter. So on this strong level, the market even make resistance level. So this is how you can trade when you observe the market. The market will move like this. Market is moving like this. And the upper side, market is also moving like this. So you should not be expecting the market to be going up to this level to say, no. Try to observe when you saw any 1, 2 move, that is the first move and second move. You should know that the third move, the market will expect that. So let it be 1, 2 move. resistance level here. You can see this is ranging, but here the market is not that ranging much. Just a flat like this. You can say the sellers entered here, sellers entered here, sellers entered, sellers entered. So if you want to try it, if you want to draw your trend line, let it touch the level. Let it touch the level. You can see the 1, 2, and the 3 move. So the third one, it might break it. If the third one has a strong momentum, it might break it. But if the momentum is not strong, it will still reverse. So observing the market is very good. And when you are placing your short trade, you should be patient. Trading a short trade, you need patience. You need to apply patience. Without patience, your win ratio will not be high. So you need to apply patience in trading when you are trading. Also, we have a support level here. If I want to draw my trend line here, I will connect from the support, resistance, and resistance. So observation is very much important in trading when you are trading. Okay, so if I want to draw my line, I will draw from this support level, resistance, then resistance. That means the support level here became resistance. After it became resistance, it became resistance. So in the next future, if the market should come to this level with a strong move, it might break it. So it will not reverse. But if it reach this level, when the momentum is not strong, it might reverse. So you should try to observe the market. The market is moving like this range, like this. So when you are placing short trade on something like this, strong seller's entry. If buyer should reach that level with a rejection, seller's enter. Same thing, trade on strong buyer's entry like this. If buyers should reach that level with a rejection, sellers enter. Here, this is how the market is moving. Market is moving like this. The market is moving like this. But what happened? The sellers enter. The sellers enter, they form a resistance level. This is a support level. The sellers break it, but here it forms a resistance level. Why did I say it forms a resistance? Because it tests the level. Check on 5-second chart. You will see some turning points here. 5-second chart. You can see the turning points. That means this is a resistance level. So you should observe how the market is moving when you are placing your trade. You might say, why didn't the market reverse the rejection, close with the rejection, but didn't reverse? Because check the level, check the previous ones. What happened? Here we have seller's entry, buyer's enter. We have strong seller's entry, buyer's enter. Here we have even from here, very strong rejection. You can see, let me play this line. So I want you to have in mind of confirmation, like the way I do. Having the mind of confirmation when you are placing your trade. So here, if you confirm it on 5-second chart, you will see very strong sellers. You will see some sellers entries here approaching this level, telling you that the momentum of sellers started here. But here we can only see not enough sellers entry. This one, no even rejection, no rejection for sellers entry, but here is a strong rejection, telling you that there are some sellers entry before this bearish candle. That's why the seller didn't respect that level. So let's check it on 5-second chart. Watch where I play this line. Look at it. Look at where I play the line. You can see very strong sellers entry. A power move of sellers approaching the support level. So it will not respect that level. Here we can see some power move, but like this one, the power move is more than previous power move of sellers. So it will not respect this level. So you should be trading having the mind of confirmation in 5-second chart. That's how I trade. Once I see any market situation, my mind will quickly go how it is formed 5-second chart or 30-second chart. That is how I place my trade with confidence. So when I see this kind of situation, I saw if I want to analyze it, I'll first check the previous candle. Strong rejection from sellers, telling you that there are some sellers entry here. But here, there's no rejection. Only we have rejection from sellers. Sellers enter. Here we have some rejection, but the rejection here and here, this one is more than sellers rejection here. So the buyers enter. So at this time, the sellers will not respect this level. So sellers will still continue, thereby forming a resistance level here. So let me explain one more, then before I go to test, just to test you guys. So just the same thing here, the same thing that happened here, but different analysis. Here we have some sellers entry here, and here we have some buyers entry. You can see why this candle reach this level, the buyers didn't enter. It's because check the previous one. You have never seen any strong candle like this with a very strong rejection. We can only see rejection here, but not strong. We can see rejection sellers entry, but no strong sellers entry. But here, sellers are not strong. So at this time, the sellers will not respect this level. If we break this level, continue, and then we continue. So if you check on 5-second chart, you will see that the sellers are entering the market very strongly compared to previous sellers entry. So at this time, they will not respect this below level. Same thing when you are trading on sideways ranging market. The same logic. Okay, that is how to observe the market when you are placing your trade. So now let me test you guys. So we are going to predict 2 candles. So if it is not necessary that everyone should talk, so if you want to talk, if you want to say something, then you can say. Because when I choose someone to talk, they will just speak. Okay, now let's assume that this is a chart now. AUD said OTC market. So we want to predict the next candle. Look at this last bearish candle. This bearish candle. So if you want to predict the next candle, first analyze, then analyze the current market, analyze the current market direction, then you now predict what will be the next candle. So everyone is free to talk. Let me unmute everyone. So you are free to talk. Your analysis and what will be the next candle after this bearish candle. Okay. Everyone to talk.
Hello, sir.
Hello. Yes, go ahead.
I will start talking.
Your analysis and what will be the next candle.
Market is trying to go, and then at a level, I'm seeing a weak buyer's entry after a bearish momentum. So,
What do you think?
and I say market is trying to go down now.
Okay.
And then market is trying to go down. I'm seeing a bearish momentum.
Okay.
At a reversal, yes, at a level where market is supposed to reverse, I'm seeing a weak bias with strong rejection from sellers.
Okay.
So I'm seeing, and after this weak bias, I'm seeing a candle, a bearish candle with new low. and then it is a hammer, sign of continuation of the bearish momentum. So the next candle will be red.
Okay. So the next candle will be red. Next person.
Hello. Hi. Hello, sir.
We are listening.
I think the next candle is red because there is a new high, new low, sorry, and the hammer candle is a continuation sign.
Okay.
And I think it's the beginning of seller's momentum.
Seller's movement.
Yes, I think that.
Hello, sir.
Right.
Hello? Hello, can you hear me?
Here we can hear you.
I would want to go with the sellers.
Why is
The
it?
reason being that number one, the market is turning.
Okay.
It's going more down. There's a turn in the market, and if you check the present candle,
Okay.
we will notice that among the three last candles, we can see buyers movement in the three last candle above.
Okay.
But the hammer candle, there's no enough buyers to go up. So it shows to me that the buyers activity is becoming weak. And
Okay.
for that reason, I want to go with seller.
Okay. So next person. Next person.
Hello. Hello.
Hello, we can hear you.
Hello, sir. I think next channel will be a red candle.
Red candle.
Yes, because a bearish momentum
Okay. Bearish momentum.
and the buyer's level is still 4
Price level is still far. Okay.
and there is a new low, a hammer candlestick and weak buyer's entry in the middle of the bearish momentum.
Okay. A new low hammer candlestick. Then we bias the middle of
Yes,
the
sir.
bearish momentum. Okay.
Yes, sir.
So now your prediction on the next candle is red, right?
Yes, 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 sir.
Okay. Next person.
So I wanted to attempt to find levels, but I don't seem to find a level near where this candle is. So I'm finding difficult to predict.
Okay.
Yes.
So I should draw it or you don't want to draw it.
I'm saying
Yeah.
I'm finding difficult in finding a level,
A level.
but what I can
Line,
is
this line I have drawn here, level.
that is a level,
Yes, it's a level.
seller's
This
level.
line here, the market reversed multiple times. Like here,
Okay.
reverse. Here, here also, here also, here also. So this is the level. So what will be your prediction on the next candle?
Okay.
Put option.
I think it will be red because
Okay.
hello.
Okay, we can hear you.
I think it will be red because the two previous candles
Okay.
have strong rejections from the top.
Okay, strong rejection
The,
from below.
and the running candle is has a stronger body.
Okay.
Yes. And there's still a gap to the level.
Okay, let's take up to the level. Okay.
Yes.
So I'll let someone to talk again, and I will.
Nothing close.
Okay.
But sir, can you draw a line here, please?
Yeah.
Can you draw? Yes, let me point it to you.
Okay.
Can you draw a line on the wick of this candle?
Okay. That means as you shift the line to the wick of the
No,
candle.
a second line. A second line. A second line.
Okay, the second line.
A second line, yeah.
Means something like this.
Yes.
Yeah, you are still correct. This is a
Nice.
reversal area. You are still correct. Even though you draw it like this, or using one line, or draw it with two lines, or even you use three lines, it's still a reversal area. You are still correct.
Okay, so no, that now to me means the candle is not very far from. It's just close at the level with the rejection. Though the rejection seems to be smaller than the other rejection.
Okay.
So because it is small, I think it will still go down.
That means your next candle now is bearish.
Will be ready.
Okay, no problem. Okay, so now let me explain. Let me predict. Let us analyze. Let us analyze the market now. So in this kind of situation, if you want to predict the next candle, first thing you do is check how the market is moving. Here, okay, here the market is moving. Here the market is moving like this, like this, like this, like this, like this, like this. But here the market starts going down because already we can see there's a seller's entry here, like this, on the left side. So here the market starts going down. Now we have already know how the market is moving. And again, there is a level here. So there's a level. If I want to place my level, if I want to draw my level, this is how I will draw my level. That is strong buyers entry here and strong sellers entry here. So this is a level. So if I want to draw it as an area, I will draw it like this, or I will draw it simply putting the next line like this. So I have drawn my area. So now I look at the market. Here we have bearish downtrend. We have a rejection, strong rejection from sellers. We can see very strong rejection, then sellers entry, rejection, sellers entry, here again rejection, then sellers. Now, rejection and sellers, but this candle is telling us another thing. It's telling us what is happening again in the market. We have bearish downtrend, we have hammer candlestick after this bullish candle, and we have a new low. But if you want to go for buyers, you can only say uptrend, level, rejection. Uptrend, level, rejection. But here we have downtrend, strong rejection on the last bullish candle, hammer candlestick with a new low. So the next level is here. The next buyer's area is here. These two lines here. You can choose this one because already the market was already reversed. So here, these two lines is bias area. That means this hammer is a continuation of this bearish downtrend. If you look at it, check what is happening in the market. You can see a continuation candle here, hammer candlestick, that after this hammer, the sellers enter. We saw the same thing here. Saw the same thing here. After this hammer, so at this time, the sellers will form a bearish trend, a bearish candle, because the market also is moving like this. The market is moving like this. Let me show you where it is. The market is moving like this and like this. So this is how the market is moving. So at this time, the next level for the buyers to enter is here, not where this candle closed. So this candle is a continuation of this bearish downtrend. So it means the next candle will be bearish. I think the next candle should be bearish, like, let me find the candle. I think something, let me find it here. I think it should be something like inverted amount, because anytime you see this pattern, anytime you see something like this, if the next candle will form, the next candle will be something like inverted hammer. So at this time, the buyers will now enter. But after this bearish candle, I think I should see something like this inverted hammer, like this, or like this, or like this. Which one again? So that means after this bearish candle, the next candle will be bearish, but it should be bearish, even though it didn't form this inverted hammer. It should be bearish. So let's check, because the sellers are trying to go more down from this level. You can see it formed a bearish candle. That means the next candle, it should be bearish. So I was expecting to see something like this inverted hammer, but it didn't form this inverted hammer. See the sign of reversal candlestick. The sign of reversal. This candle here, I think on the next candle should be bullish. I think the next candle should be bullish because of this reversal candlestick from this level. So all this scenario, all this candle that is forming here, they are forming from this level, because this is a reversal area. The market reversed so many times on this area. The market reversed here, here. The market also reversed here. So this is a reversal area. Now, at the reversal area, I saw something like a reversal candlestick having upper rejection and lower rejection. So it means that the market will still reverse. But if I see this kind of candle, it is also reverse. So at this time, the buyers should enter. Let's see. You can see very strong buyers entry from this level. So you can see that this is a reversal area. That means the market is reversing. Now, at this time, I see something like a reversal candlestick. That's why I say either it should be inverted hammer to reverse the market, or any kind of reversal candlestick. But here, I saw this reversal candlestick. That means buyers will enter. So when you're analyzing the candles, when you're analyzing the market, try to follow this minor trend. So let me choose another pair.
Sir, before you go,
Okay.
Why did you enlarge the area? I see now the area is large. How did you arrive at that?
Where?
The reversal area. I see now it's large.
Okay, that means the area, reversal area. I'm not clear what you're saying.
Now, let me draw something. Huh?
Okay.
I see you have introduced this line here. Hello?
Hello, I'm listening.
I see you've introduced a new line. Why this new line here?
Yes.
For the level.
You mean something like this? Why I place the line here? I place the line because the market reversed on that area too. Like I said, that anywhere you see a level that the market reversed multiple times, it's an area. It's a reversal area because here the market reversed here, the market reversed here, same thing here, same thing rejection it reversed, same thing it reversed here. So this line you can also take it as reversal area. Also the same thing on the next line. So if I want to draw all the reversal area, let me start it from here. I have drawn the first one. Let me draw the second one. The second one will be something somewhere here. Because here the market reverse, the market reverse, the market reverse, the market reverse, it reverse here, and here also it reverse. And here you can see it reverse here, it reverse again on this first one. So it means this is a strong reversal area. If I want to draw the third area, I will draw it somewhere here. Because here the market reverse. Here also it reverse. Here also it reverse. And again, here also it reverse. We check, it reverse. So it means this area is also a reversal area. If we draw again the next level, the next reversal area, it should be somewhere here. Because the market reverse, the market also reverse here, it reverse, and here it reverse. That means here, this is a reversal area, this is also a reversal area, this one also is a reversal area, and this one also is a reversal area. So anytime the market approach any of this area, try to understand how the market is formed, how the candle formed, how the momentum is before you can predict what will be the next candle on this area. So you can see that the market is ranging. That's why I choose all this horizontal area. So in a trending market, you will not see something like this. So I just choose this line because I saw some reversal. That's why I choose the first line. So here also. And here, if you find out many reversal area here, you can find so many. Okay.
Thank you, thank you, thank you.
All right. So this will be the last. Here, so I don't want. Okay, here, look at this bullish candle. At this time, what will be the next candle? So everyone should talk. What will be the next candle here after this bullish candle? The ladies too should talk because I have there's not all the men want to know how to trade. So the ladies also to say something. Don't keep quiet. So at this time, this is a bullish candle here. What will be the next candle?
Could you please draw the line for us?
The line.
Yes, the reversal point.
Reversal.
We have seen a minor downtrend.
Yeah, minor downtrend. Just
Mm.
predict what will be the next candle. Just analyze.
Okay. We have seen a minor downtrend.
Yes, the minor downtrend.
And then actually buyers started coming into the market where we see this strong rejection and then small bullish candle, then followed by a strong bullish candle.
Okay.
So we expect to have another green candle before the market will.
Okay. So that means you want to draw your level. Where will you draw your level? Where will you draw your level? You want to draw your level?
This area.
Somewhere here. Okay.
Yes.
Okay, now your prediction is saying the next candle will be bullish.
Yes, bullish.
Okay, no problem. Next person.
Hello.
Yeah.
I think it will be a red candle because I saw previously after strong bullish candle the market rejection with some here and on the left also. No, not here.
Market
yeah, after strong bullish candle the market is reverse. And the minor trend is downtrend.
Yeah.
So the next one is red.
So the next candle will be red.
Yeah.
Okay. Next person. Next person.
It will be red.
Red. Why red?
Yeah. Because it is close near to the resistance level, and the candle is strong and minor downtrend.
Okay.
And we can see the rejection from the same level, reversal 2-3 times.
Okay.
Yeah.
So the next candle will be red.
So, yeah, it will go a little up and hit the resistance and could be reversed from that level. Yeah.
Okay. Next person.
I think let me draw something. I don't know whether it works. I think number one is this is a downtrend.
Okay, downtrend.
So it's like moving this way.
Okay.
So I think it has clearly broken the downtrend.
The resistance level. Okay.
Yes. So I think it will go up.
Okay, that means the next candle will be bullish.
Yes.
Okay, no problem. Next person.
Because of the big rejection from the downward.
Okay, okay. Next person.
Hello.
Yeah.
I think the next candle will be a bullish candle.
Bullish candle. Okay, why bullish?
Because from this resistance previously we see a green candle. Then we are seeing strong rejection from buyers.
Okay.
Now this area has become very weak and buyers entering with strong buying pressure. That's why I'm thinking a bullish candle for one until we see weakness in buyers.
Okay. So the next candle will be bullish.
Yes, sir.
Okay, no problem. Next person. I think others are afraid to talk, so no problem. So let me explain, because others are afraid to talk. No problem. So now, at this kind of situation, if you want to predict the next candle, the prediction could be the following, the current price movement. I think someone said, okay, someone said the market is moving like this. Like this. And here, I'm coming to it. That the market is moving like this and like this. Here, you are correct. So if I want to go with my prediction, the person that said the market is moving like this has already explained what will be the next candle. He said the next candle will be bullish. Next candle will be bullish. Because why is it bullish? The market is moving like this, in this direction. We have buyers entry, sellers entry, buyers entry, sellers entry. That means the market is bouncing in this range, in this direction. The market is bouncing like this. So now buyers force themselves to get out of the ranging move. Buyers force themselves to get out of the ranging move. Very strong buyers entry. So what happened? The rejection is not enough. Like I told you that whenever I see a strong rejection after a breakout, you should go with sellers in the next candle. But here, the rejection is not enough. Very small rejection. The rejection from buyers is more than the rejection from sellers. So it means that the next candle will be bullish. The next candle will be bullish. And some of you that say you choose this level, sorry, this level, or let me tell you, this level you choose is also correct. But like I told you that when you are choosing a level, choose the level that has the, let's say that choose the level that start the momentum like this, the starting and the closing. We have a closing of this sellers movement, and here we have closing of this sellers and trend. That means these are the strong levels when you are trading. Here also, this sellers movement, this is the closing sellers movement. Here, the buyers movement here, this is the closing buyers movement, and this is the starting buyers movement. So if I want to draw my level here, this is how I will draw my level. Most of the time you see me drawing level anyhow, but just to confuse some of it, I draw the level like this. I want to draw level. This. So I draw level like this one, and this one. Then I will now check what happened. You can see it still crossed the level. Crossing this level, no strong rejection from sellers. It crossed this downtrend movement. The horizontal level, it also crossed it, but no strong rejection. So the rejection from buyers is more than the rejection from sellers. If the rejection is something like this, whereby the rejection of buyers is lower and the strong rejection like this, the next candle will be bearish. That's why I say observing the candles, the market direction and the candles. Here, the next candle will be bullish. So let's see. You can see it is a bullish candle because when you observe the market is moving in this direction. The market is moving like this, like this. So this is how the market is moving. The market is moving in this direction. So at this time, the market broke the level. On the horizontal area, we draw our level. See, it broke it. You can see there is a rejection from buyers. The rejection from buyers here is more than the rejection from sellers. Assuming that there's no rejection from buyers here, and we only have rejection from sellers, the next candle will be bearish. But because rejection from buyers here is stronger than the rejection from sellers, this is a strong candle. You can see that the sellers still try to go down because of this downtrend. Sellers try to go down. But because this level previously, the buyers have broke it with a strong body, buying pressure, with a strong buying pressure. So at this time, the next candle will be bullish. So the sellers will try to test this level after this breakout. But assuming that the level is not strong and the sellers try to test the level, they will continue. They will continue, the sellers will enter again. So at this time, the sellers will not enter. The sellers will not enter because of what the market has, because of how the market is moving. Market is moving like this, and there's a breakout. There's a breakout, both horizontal breakout and the trendy move like this. So the next candle will be bullish. This candle is very strong. Rejection from buyers is more than the rejection from sellers. So this candle is very strong. So buyers enter. So I want to show you another method of analyzing the candle and analyzing the market without checking the previous ones. You can just analyze by just seeing what is happening on the candles. So let me choose another pair, and this will be the last. So you don't need, I will just test you, maybe you will get it. Here, there's no need to check previous pen. So I will just test it if you are going to analyze it very well. Okay, now, there's no need to, you can even use the previous market situation for your analysis. But here, look at this strong bullish candle. What do you think will be the next candle? So everyone should talk.
Green.
Why red?
I say green.
Say green.
Why red?
I say green candle.
A green candle. Why green?
A green candle we are seeing previously buyers enters very strong from the left.
Yes.
And then the next candle was green.
Okay.
And we are even seeing a little diagonal move.
Okay.
So we are seeing a strong candle. We may expect another green candle from before the market will reverse, so that this green candle will reach to the level where this red sellers entered.
Okay. So now your prediction now is green.
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 Okay.
I think it will be red because I saw
It should be red.
from
Why red?
a strong rejection and want to move.
Strong rejection and want to move. Okay.
I agree with her.
Yeah.
I agree with her sentiments.
Okay. You mean the strong rejection and want to move?
Yes.
Check it well.
Want to move. We have to put it on the body, right? Not on the wicks.
That's what I do here. So this is the first want to move.
And the other one, the other red, we can go down with this one.
Okay, let me do it again. Something like this.
Mm-hmm.
Coming. Let me do it again.
Yeah.
You mean
She
something like
touched
this?
the red. She did touch
Yes.
the red or the green candle.
Okay, that means the next candle will be green or red. The next
It
candle
will be red.
red.
Red candle.
Red candle. Okay. Okay. No problem. Next person.
Red candle on the same argument.
You mean the next candle will be
Red.
red?
Yes.
Okay. Next person. There's one thing I want you guys to observe here. So okay, no problem. I will explain to that. So what will be the next candle? Next person.
Green. Sir.
Why green?
Green.
Why green?
I've explained it before.
Okay.
I've explained it before now. I'm the first person that spoke.
Okay. Yes, next person. We have so many people here, they don't want to talk. Okay, drink handle. Everyone are going to drink handle. I think now you are getting it. But those of you are still getting it, those of you who will read, but you never know what will be the next handle. So when I start my analysis, so we know what will be the next handle. So let someone should, we see how so many people here, let them talk.
I think that candle will rise.
Red.
Yes.
Okay.
Because the candle moving trend line and make the new low.
Okay.
And decision from seller.
Okay. So I think I've explained what will be the next candle. I think someone is drawing. Who is drawing this line? Who is drawing this? Okay. Now, when you want to predict what will be the next candle here, now there's no need to go to the previous side to check levels or anything, or already you are seeing what will be you are seeing the whole chart here. You are seeing what is happening here. I told you that when you want to predict, check out the direction of the market. The market is moving in this direction, like this, seller enter, like this, seller enter, and again, buyers again enter. So at this time, the sellers are entering from this level, and the buyers are entering from this level. So one thing we need to observe is that we have a strong sellers momentum. We have another sellers momentum. Compare this sellers momentum with this. The momentum of sellers here are not strong, while the momentum of sellers here are strong. This one is stronger than this, telling you that the power of sellers reduce when approaching when the buyers reach this level. That is one market observation. Now, the second observation is this. We have weak bullish candle. It reversed the market with weak body. We have weak bullish candle. With weak body, it reversed the market. But here we have strong bullish candle with a rejection. So with a rejection from sellers, while here we have some weak body, small body that reverse the market, but here we have a strong body, very one candle with a rejection from sellers. So at this time, that is the next market observation. The third one is this. We have that the market is moving like this, like this, like this, like this, like this, and now like this, like this, like this. Again, buyers enter. Let me draw it very well. Lower high, lower low. Lower high, lower low. Lower high, lower low. This is the first lower high. This is the second. This is the second lower high. This is first lower low. While this is the second lower low. Now look at it. We have a very small, a very space here. Space. We have strong space here, and here we have very small space. Telling you that at this time, the sellers are more powerful here to accumulate sellers, to accumulate buyers if buyers approach this area. And here, the buyers are not powerful here to even accept sellers. If sellers have entered this level, then maybe the sellers will reverse. So on the left side, sellers might break this level. But here, there's enough space to accumulate buyers to reach this entry, to reach this area. So at this time, if I want to go with my prediction will be bullish. I will not go with sellers, although I have said that when you have a 1-2 move here, but not only focusing on 1-2 move. That is what will make you predict the next candle. Try to check how the candle behave, how the market is behaving. All this thing is because I have experienced it. That's why my analysis is like this, because I have experienced it. So if you are an experienced trader, you will know all these tricks. The market is trying to fake some traders who are about to sell the market here, who are about to place a put option here. So the market is trying to fake some trader. It's trying to trick them. But here, if you have some good experience, you will know that the next candle will not be bearish. It is after the next candle, at least a bullish candle will form at least 1 minute or 2 minutes. If the candle will form something like this, that means it should reverse. Or something like this, that means it should reverse. So at least the next candle will be a bullish candle, at least 1 minute or 2 minutes. So I don't know, maybe 2 minutes. If the candle will close any of these candles, it can be either 1 minute. So let's see. So when you're analyzing the market, try to think deep of how the market is behaving on each level. So you just place put option here, the market will just give you can see, look at what I said. A bullish candle. Like I said that it should be something like this or like this to reverse the market. Telling you that at this time, the sellers will now give up because we have strong rejection connected with this lower rejection. So the buyers will now give up. for the sellers to enter. So at this time, the market will not easily reverse. Even though you will draw an area here, if you are going to draw an area, there's a way you can draw an area. I think I should teach you guys how to draw trend line area. That one too is very much important. How to draw trend line area. Let me delete this. Let's say you want to draw an area here. If you draw an area, you will still get some confidence to place call option here, not put option. Let me show you. You want to draw an area, starting from here, touching the body of the candle, body of this one. Then you clone it. After cloning it, take it to the upper side. This upper width. Take it to the upper width. Now check how the candle close. You can see that the candle didn't close in that area. The candle didn't close in that area. We just got a rejection from that area. So it didn't close exactly at the area. That means buyer will still form a bullish candle. You can see that when buyers try to enter, the sellers also try to test this level because already this has already been occupied by sellers and buyers. It's occupied by buyers. So at this time, sellers try to test this level because this is an area. And what happened? The candle closed at the area with a rejection. Lower rejection and upper rejection. A reversal candlestick because of this. That's why the next candle was bearish. You can see that the body is small, like all this one that reversed the market, like this one. The body is not like this. The body is very, this one is very strong, telling you that at this time, buyers will not give up immediately. The buyers will not give up immediately because the body here is strong, while the previous body are very small. So until the buyer become weak, before the buyers will reverse the market. So now how to draw a trend line area. Let me choose another. Okay. Even drawing this area is very much important. Very. How to draw trend line area. Let's say we want to connect this one and this one. Here, the body, this bullish chain to red. Okay, to the wick, you clone it. After cloning it, drag it to the highest wick here, the highest upper wick here. Upper wick. No need of saying you should touch the second one. Just for you to find out the highest wick. Here we have some upper wick here, but I see this one as the highest wick. This one, this. I see this one. I see this one as the highest wick here. So there's no need for you to say you should connect it to this one. But once you get your proper level here, that one is enough. I see this one as the highest wick. But what happened? The market rejects. So it rejects. Why it didn't reverse? Because of the momentum. Because you cannot see momentum like this that approach this level on the left side that it will reverse. But here we can see strong bearish candle. So it will not reverse immediately like this. So when you want to draw an area, this is how you draw an area. This is how you draw an area. First check the 1, 2 move. You have 1 and 2. I think this one. 1 and 2 move. Anyone you choose. But let it touch anyone, any of the level. 1 and 2 move. Then you place your line at the body, at this one and this one. So again, you now check which one has the highest point. Here we have the highest point here, and also we have the highest point. That means this one is the highest point. So when you want to draw an area, check the level, the candle that closed at that area, and confirm. Check previously. Once you see that the candle closed like it, don't quickly decide what will be the next candle. Go back and check what happened before. We can see very weak bias, reverse. Weak bias here, reverse. weak bias here, reverse here, but we can see very strong bullish candle. So it will not reverse. Don't quickly place put option here. Check what happened previously before you place your trade. Same thing here.
Sir, before you move from there,
okay,
I still have a problem. Could you zoom in?
Okay.
Again, I still have a problem on how you drew the first line.
Okay, how I draw the first line.
I thought it should touch somewhere here and then touch this candle.
No, you can see that after this bullish candle, next candle, there's no bullish here. There's no bullish candle here. So this is the turning point. This is where the turning point started, because after this bullish candle, we are seeing a bearish candle. This is just the business of OTC market. That is the nonsense that OTC market always do. You can see two bullish candle, bearish candle on the same level. Instead of giving a gap to for the second bearish candle, but here they are forming on the same level.
Yeah.
So it should be somewhere here, not here, because we didn't have any. The previous one is not bullish candle. This is where we have the bullish candle that reverse. So it should be here, not here. That's why I placed the line here. This is just a fake moment, a fake moment.
So in this case, you touch this candle, this one.
Yes, it touched the like this from here to here. From here to here. So it touches like this. And the clone it, let it be on the highest point of this candle.
Okay.
The highest point here. So no need of saying if you find it, maybe like don't disturb this line. Use it like this. Once you clone it, don't disturb the line.
Okay.
Okay. So you now find your area. Then don't just decide to place put option. Try to check the momentum. Try to check what happened on this area previously. Because we can see no sign of bias here. A weak bias, a weak bias, a weak bias on the same area. But here we are seeing strong bias. So it will not reverse unless we see a weak bias here. We can also reverse the market. So this is how you can place your trade when you are observing the market. Try to observe the market movement. Market is always tricky most of the time to convince traders. So if you try to understand what the market is doing, that means look at this area. That means at this area, a bullish candle is formed. Instead of bearish candle at this area, we are seeing a bullish candle. So that means from this area, a bullish candle is formed. If sellers now approach this level in the future, if we reverse the market. Okay. That means if sellers approach this level in the future, if we reverse the market, because from this area we are seeing a bullish candle. It's just like saying a level like this, we are seeing a bearish candle on a support level. Instead of buyers, we are seeing a bearish candle. So if buyers should now come to that same level like this, that is from this support level, instead of bullish candle, we are seeing a bearish candle that continues market. So if buyers should come to that same level, the next candle will be bearish. That is a pattern. That is a level like this, where the market reverse, and again the sellers come in, testing this level, and instead of bullish candle, we are seeing a bearish candle. Then the market continues. Again, buyers try again to test that level. So at this time, this buyers the market reverse once buyers reach that level. That is what is really happening here, because that's what is happening here. Because this area that we have drawn, we are seeing a bullish candle that formed from that area. So if sellers should come to that level, when you draw it well, the seller should come to that level, buyers will enter. So at this time, the buyers will enter. That means the buyers have already created two resistance, two supports. So if you only try the first attempt, whenever you see market like this, try the first attempt. Don't try the second. Second, also you can try it, but to be on silver side, first attempt very good. So that one is a pattern. Another pattern is this. When you have a market like this, when you have the, let's say, this resistance level and the support level, then the sellers are entering here, buyers enter, sellers enter, buyers enter, sellers enter, buyers enter. But here, we are seeing a bullish momentum, very strong bullish momentum. And here on this level, instead of bullish candle to form, the buyer should cross this level, very small breakout. It means that if next candle will be bearish, they will test this level. Then on testing this level, the buyers will enter. So if buyers enter, the wick that formed on this level is now a support level. So that support level will now become support level 1. So on the next one, it becomes support level 2. Let me show you this logic. So it's too complicated, and I'll always observe that in markets. I'll show you. Like this now. Look at this bullish candle. This line I place here. If you check on the left side, there's a level here. You can see that I place it exactly where this candle is open. So if you check on the left side, there's a level. You can see here is level. You can see here there's a level. And look at it. If I'm placing my line here, because I say that I don't have a specific place to place my line. If I place my line here and I check that it's cross it after I'm seeing a strong object like this, and it cross it with strong bullish momentum like this. That means at this time, if you cross it, I will place call option. Once I place call option, the candle will test the level again. You can see it test the level with a rejection, then buyers enter. So I will now take this level as support 1. So if markets should approach this same level, if markets should approach this same level, let me show it well. That is this level and this level. I have chosen it as my support. So if market should approach that level, the market will reverse. So that means the market has already been used once and twice. The level has been used once and twice. I think I made this video some days ago. I have not uploaded it yet. It's because of the network. So maybe I will upload it after this class. I will upload it. It's still on OTC market. So the first level is here and the second level is here. 1 and 2. So you should not try to use it the third time. You should not try to use it the third time. You can see the market reverse, didn't reverse. Here you can see that the market also behaved the same thing. Here and here. That means there's a level here which the market didn't reverse. But here, if you check it, the first resistance level is here. And if you check on the left side, no rejection from sellers. That's why the candle cross it, then sellers enter. So at this time, first resistance has been used here, and again has been used here. So in the future, if that level is tested again, it will not work. So it is better to use it once or twice to be on the safer side. So all these things you need to observe market. you can see that here the market didn't reverse because there's no sign of reversal, no rejection. So until the market crosses it with a rejection, that's why it reversed. So it means that here we have the resistance 1 and we have the resistance 2. If we check that on 5 seconds, you will see some seller's entry as a level here on 5 seconds. You can see on 5 seconds, you can see some seller's entry starting from this level. So if the market should approach that level and it crosses it, the sellers will enter. So I think in my next class, I will show you one simple strategy, how I trade on 5 seconds. I have made a video on that, how I trade on 5 seconds. And that logic is very simple. That is the logic I want to apply on this robot trading. So I want to apply that same logic, but I'm looking at how to implement it. Although I didn't recommend you guys to use robots because iCoption blocks so many traders that use robots. So they are blocking accounts if they find out that you are using robots. So I once used robot before, but they blocked the account because I used the account to make more money, or they blocked it. So I don't advise you guys to be using robots. The one I can advise you is the one they use with MetaTrader 4 or 5. That is the EA advisor, expert advisor. You can use that as signal. So I want to implement this strategy, this 5-second strategy on that same robot. That is what I planning to do, but I look at everything that is not that good to use it when you are trading on binary or iCoption. iCoption doesn't want to lose money, so they want to be on top of you, on top of trader. So once they notice that you are using robot to trade, they will block your account. And if you have more money on your account, they will block it. So it's better not to depend on robots. Either you trade yourself or you expect something like Signal, or you be trading with Signal. Okay. So on my next class, I will teach you how to use this 5-second strategy. 5-second strategy. I will make a video on that. Okay, this is how you can place your trade on. You can see here we have. Okay, I think I've explained this. This is how you can place your trade. Most of the time, if you want to trade, most of the time you'll be going back, checking levels and drawing levels. Most of the time, some of you will try to check if there is a strong level. If you didn't see any strong level, you will continue going backward just to find a level. That's not how to trade. Everything is seen on the current price movement before you can place your trade. Like now, even though I didn't check that this is a downtrend and I want to predict the next candle here, I can predict what will be the next candle once I see the behavior here and I see the behavior here. So I will predict what will be the next candle. I can only confirm if my prediction is right by checking. If my prediction is right by checking the previous trend, just to go with the trend. And again, guys, what I want to advise you is that always follow the trend. Don't go against the trend. That is one thing. Don't go against the trend. Follow the trend. Follow the trend. That is one of our secrets as a professional trader. We follow the trend. If you want to go against the trend, we usually take risks going against the trend. If you want to take trade according to the market movement. Be patient. Don't rush and place your trade. If you place one trade and you have the winning and you win that trade, give chance to place another trade. Give chance for the market. Think about it. If you are going to trade on that same pair, you think about it, you wait. This will now help you to be trading or to know about all market tricks when you practice this all the time. But if you want to practice this, or you want to know all market tricks, you don't need to be trading one candle every minute. Try to give chance. Once you got this one as a red candle, try to give chance. Maybe your next trade should be somewhere here, or your next trade should be somewhere here, or you change the pair. You change the pair to another. Maybe your next trade should be somewhere here, and the first one you take was here. The second one you take was here. But if you are trying to predict like this first one, second, first, the third, fourth, fifth, if you are trying to do like this, it might reach a certain time that your mind is thinking something else. And immediately you lost one trade. Immediately you lost one trade. Your mind, you can't control your mind again. You can't control your mind to be placing your trade again. So maybe that's why you give chance for the markets. Always give chance. So it is when you do that and you know all market tricks before you can be placing like this. Placing one, put call option, put option, call option, put option. If you know all market tricks, that's how you can place your trade. But don't trade on every candlestick and follow the trend. Follow the direction of the trend. Observe the market movement, the market direction. Observe the market direction. Observe the market movement before you place your trade. Don't go against the trend. Don't trade against the market movement, and don't trade on every candlestick. This will help you increase your winning ratio. You can see that some days ago I did a video on my demo account on how I took 9 trades, total 9 trades without OTF. You can see not that I'm trading on every candlestick. Once I take trade on this one, I go on the next pair. I take on this one, I go on the next pair. Not that I can't trade 9 candles here. I can do that. I can trade 9 candles. But because I'm using a bounty count, so it's only 10 minutes that we have. I bought the upgrade version. I don't know why it's not working. So up to now, I don't know why it's not working because I bought the upgrade version. So only 10 minutes. They only give me 10 minutes. And I don't know any other software that can help me with that. So that's why I can take more than 4 trades. I can take more than 10 in a row. And all the pairs, I can take all these pairs, let's say 3 trades. Or if I finish all the pairs, then I can trade again the 4th time. All these pairs, I can trade it all the 3 times. So it depends on how I understand the market and the tricks and the experience I have in the market. So when you have some experience, you can place your trade. Here we have a resistance level. But here you can see the market reach this level, it didn't reverse. So it didn't reverse because there's no rejection, but you cannot say this is a confirmation of what you are doing. You can see the market moving. Market is moving like this, in this direction. So at this time, the market approached this level, it reversed. So this is how you need to observe. Once the market approach any level, check on the left side, see how the market is moving, then you can place your trade. And check how the market is behaving. You can see that buyers are becoming stronger here, like this. Let me show you. Buyers are 2s here, there are 3 here, and there are 4 or 5. So here, the buyers are becoming more powerful. So at this time, when they fail to make a bullish candle here, they fail to make a bullish candle here, they fail to make a bullish candle. So at this time, here, the sellers also are becoming weak. They become weak on this level when we have some sellers entry, but here they become weak. That's why the buyers continue, because the power of buyers is now the power of buyers now increased than previous buyers entry. So when you observe it like this, you can place your trade. Okay, don't go against the trend. I repeat, don't go against the trend, and don't fight back the market by trading on every candlestick. Give chance of the market to think. If you are fighting on the market, trading on one candlestick, you lost. The second one you trade, you lost again. The third one, you win. The fourth one, you lost. The fifth one, you win. That is, you are fighting with the market. So give chance for the market to think. It is when you master every tricks, then you can be placing your trade with confidence. That's what I did. When I first start trading, I don't trade on every candlestick. Before I used to trade on every candlestick, but I see that my winning ratio is more high on every candlestick. So I now started trading on pairs. That is, trade on one pairs, analyze it very well, and then go to the next one. Or trade on one candle, analyze it very well, then I wait either 2 or 3 or more than 5 minutes, then place. So this is how I was able to know all market trades before I place my trade. So when you do this, when you observe it, and when you practice it, you can see that your win ratio will be high when you are placing your trade. Always observe the market direction, the momentum, and the rejection area, the buyers and sellers area. It is very much important to identify this area on the chart. So there's nothing like buyers and sellers area. It is resistance area and support area. Resistance area and support area. Like I told you, you can see a very strong seller entry. You can use this as a resistance area. And that means the sellers are waiting to sell the market. That doesn't mean that this is the area. It's not written on them that is the seller's area. But the sellers are waiting here at this area to buy this, to sell the market. So if buyers should approach this level, sellers will enter. So this is a strong seller's area, not the seller's area, not that is written on them or is found on them as seller's area. It's a resistance area, but sellers are there. Same thing, support area, support level. So buyers are there. Support, buyers are there. This one, strong support. Now, in this case, where you see something like this, bullish, bearish, and bullish, this is a reversal area. There's no need to go on the left side to go and check again. Once you see something like this, the first candle was bullish, the second candle was bearish, and the third one was bullish. That means here we have some level and also have some here, because buyers reach this level, sellers enter. Sellers reach this level, buyers enter. So here and here, this is a reversal area. Same thing here, reversal area. Same thing here, reversal area. Same thing here, bearish, green, and bearish, reversal area. Same thing here, reversal area. Bearish, green, and bearish. So there's no need to go on the left side to be checking level. Once you find it, once you see this kind of situation, you know that it's a reversal area. And now it's a reversal area. Anytime the market approaches the level, the market always reverse. You can see it reverse here. You can see it reverse. You can see it reverse. But here it didn't reverse because it didn't close at the level. You only close with a strong rejection. So you should observe the market that what happened here that makes the market reverse is not something that is happening here. We have seen different candles formation. So it will not reverse here. So here you can see it reverse. So it's a strong reversal area. That's why most of the time you see me placing my line on one candle that reverse. So I already know how to place the next candle. That's why I take that as a reversal area. Or I choose If I want to take only short trades, I choose something like this. Strong buyer's entry. I choose it like this. This is the buyer's area. So if sellers will come to that level, buyers will enter. So this is a buyer's area. Strong buyer's area. That means this is a short trade. And I will only use it once. The next time, if they approach that level, if I didn't see any confirmation, I will go with sellers. But if I see any confirmation, I will go with buyers. So this is how you can place your trade with observation and following the trend, and analysis, and the rest. Which one? What do you want me to repeat? Short trade. And that is what I just explained now. That when you are placing your trade on buyer's area and sellers area, here we have strong sellers entry here. So if market should come to this level, that means you should wait for the market to reach this level. You should wait for the market to reach this level. Then when it reaches the level, sellers enter. So that means you are taking one trade. Wait again. Look for the next opportunity. Don't use the level again. Don't use, even though the market will reverse, don't use the level again. Go for another chart or you wait again. We have another level here. Here, and this one also. Because sellers enter from this level very strongly. You can see more than one hand. So if buyers should come to that level with a rejection is reverse. You can see it reverse. So once you wait, that means if you want to be successful in trading, you should be waiting. You should have patience. Don't rush yourself in placing some trades here. Let the market approach that level again and see how it approaches the level. Once you see the reaction, then you can place your trade. This is how you can place your trade with confidence and with patience. So any more question? Here we have strong buyers, and you can use this as your strong buyers. When buyer sellers approach the level, you can see buyers enter. So here they didn't enter because that's why I say you should always use it once. You can see here buyers didn't enter when they reach the level. So you should use it once. Okay. Any more question? This one we can use it as strong buyers area. Strong buyers area. So if sellers will come to that level, it will reverse. So you should be using it once, not twice. And try to observe how the candle close at that level. Try to observe. You can see here it touched this buyer's area, buyers entered here, but here the market didn't reverse. What happened? The trend. The trend is strong downtrend, bearish momentum. Because on the left side, you can see only one single seller's entry was not strong. It reversed. But here you can see some strong sellers entry that reversed that approaching that level. So it will not reverse. So at this time, you should take it that the next candle will be bearish until you cross it or until you cross it with a rejection, or you can place call option. And you can see it's also working as a resistance level after this breakout, because this is a strong level, a breakout, and then it works as a resistance level. Same thing here, strong sellers entry. You can see weak buyers. So here, if you see strong buyers at that level, that appear at that level, it will not reverse. Okay. So it will not reverse. This is how you can place your trade with confidence and with short trade. Once you are observing, when you are observing the market, And don't always go against the momentum. Don't always go against the momentum. And I want to show you guys about trend. If you see a trendy move like this, don't trade this kind of trendy move. But trade in this kind of trendy move, where you have higher highs and higher lows and lower highs and lower lows like this, like this. But if you see a straight one like this, don't trade. Don't trade on this kind of trend. It's too risky. If you want to trade on this kind of trend, you choose 5-second chart to trade like this on this trend. So it's too risky to place your trade in this kind of trend. Try to choose market like this, in a downward trend. Same thing, upward trend. Like this. Try to choose the market like this. Okay, this is how you can place your trade with confidence. Be short trade, and always observe market before you place your trade. Okay. Any more questions before you call it a day? Any more questions?
No problem.
What do you say?
I'm surprised. More information. So I'm surprised.
Okay. So the absence of question, I think we should call it a day. So everyone of you practice and trade. Then if you practice and you will see that your winning ratio is high, then you can place your trade on real account. Okay. So everyone should try. Everyone should practice. And if you have any confusion or anything that confuses you, try to let us know on the chat group. So if you have any problem, just let us know. Okay. Okay, I think we should call it a day. Okay, guys. So this season, just keep yourself safe in this season and try to follow the market. Keep yourself safe. Okay. Okay, bye everyone.
Bye, teacher.
Bye, sir. Thank you so very much.
All right.
Thank you.
All right.
Okay. Or tomorrow we'll keep going.
What do you say?
The next tomorrow we keep going.
Tomorrow
Yes.
Because I want to start a new batch with so I want to start lesson with some new batch. So there's a way I want to do it. So I want to divide it, and I want you guys to attend it. So I will start new batch with them. So I want you guys to attend it. Don't worry about the fee.
Yes.
Don't worry about the fee, but just join it. Just join them. So it's just like a recap of what you guys have learned. So it's just something that we will start from the beginning, and there can be some maybe some information that you have never known before or you have never heard. So you can join them.
Yes.
Okay, no problem.
Thank you, sir.
So guys, what do you say? Okay, maybe anything you want to say. Java guy didn't say anything. Okay, no problem. And some other didn't say anything. I think Some of you didn't say anything, okay, no problem. So anything you want to say, let it be on the group chat. Okay. Bye everyone. Have a nice day.